This program is made possible in part by the University of Wisconsin-Milwaukee, one of America's top research universities, preparing students for today's interdependent world with internationally focused academic and outreach programs. The Institute of World Affairs at the University of Wisconsin-Milwaukee presents International Focus, a weekly discussion of the people and events behind today's global headlines. Now, here's your host, Doug Savage.
In December 2017, Bitcoin began futures trading on two major American exchanges. Even as many government officials, business leaders, and economists warn against the so-called cryptocurrencies, the growing involvement of top financial institutions underscores their increasing mainstream acceptance. At the core of the cryptocurrency revolution is a technology known as blockchain, which allows digital information to be distributed but not copied. Originally created for use with Bitcoin and other digital currencies, technologists, like our guest today, are exploring new applications for blockchain in other fields. William Caraher has 20 years of experience managing and supporting enterprise-level technology. He currently serves as Chief Information Officer and Director of Operations for Briesen and Roper law firm, where he's been recognized as a standout CEO by Forbes and the Huffington Post. Under his leadership, Briesen was the first Wisconsin law firm to implement an artificial intelligence solution using IBM's Watson technology. The firm is now researching usage for blockchain and related emerging technologies. Bill, welcome to International Focus.
Thank you very much. Thanks for having me.
Well, I'd like to start out with a quote and a factoid and get your reaction. First, from Harvard Business School professors Marco Ianciti and Kareem Alachami in the Harvard Business Review, who say blockchain has the potential to create new foundations for our economic and social systems. And a little factoid, by 2025, 10% of the global GDP would be stored on blockchain technology, according to a prediction by the World Economic Forum report of a few years ago. So I guess the first and obvious question is, what is it?
Definitely. That's a question that's pondered many people, and if you Google search, there's a lot of answers too. But if we go back to the basics of Bitcoin, its notoriety first came about with anonymous transactions. So it's a way to exchange value via anonymous transactions. So it's based upon this concept of blockchain, or storing information in a distributed ledger anonymously, and that you can trade value between parties without knowing the other person on the other end of the transaction. Initially, Bitcoin got a bit of a negative response, though, because being anonymous, it also led to things like the dark web and Silk Road popping up as, hey, I can buy goods and services that may be illegal, and using this medium, you don't have any recourse for following laws or established government practices. So initially, Bitcoin a couple years ago used for these things, and probably the most publicly available aware situation was ransomware. So people were getting their computers infected, and the only way to uninfect your computer is to buy a Bitcoin and then give it to this person holding your computer or data for ransom. So initially there was a lot of negativity. Consumers and businesses alike were saying, we don't want to take Bitcoin, we don't want Bitcoin association, because it was associated with illegal activity and ransomware and hacking. But now with all this press around the price of Bitcoin and the possible applications and future of blockchain technology, it's kind of changed its tune a little bit in the marketplace, saying, hey, this could be a viable currency, it could be a viable way to exchange payment for goods and services, and this underpinning technology, blockchain, could be valid for a lot of different applications. So the story has really changed and migrated in the last few years from one of, hey, let's stay away from this, it's dangerous and associated with negative things, to, wow, okay, this really has staying power, it has value, and there's a lot of applications for it.
So besides just being an investment, we all see the gaudy numbers of how the prices run up in the last several years. To what extent is it a practical medium of exchange? If I'm not buying illicit Stinger missiles or contraband. I mean, if I want to buy a hamburger, can I do it with Bitcoin?
Definitely. With systems like Coinbase, you can sign up and create a Coinbase account, and you create a wallet. And within that, then you can change fiat currency or US dollars into Bitcoin and deposit that into your virtual wallet. You go to a retailer and you have your Coinbase application, you launch it, and depending on how much you are buying, if it's a $2 hamburger, you can punch that into the application and display a QR code, and the retailer would scan it, and those percentage points of a Bitcoin would be deducted from your wallet, and you're essentially paying for goods from a Bitcoin wallet.
So how common is the acceptance of Bitcoin at this point then?
I don't have statistics, but I do know that it's still very much exploratory for a lot of retailers. One of the challenges that has been often cited about Bitcoin acceptance is a transaction fee for the merchant and the transaction time. So anybody can sign up to be a transaction merchant. That's not complicated, but in order to have that transaction fee, just like when you accept Visa or a credit card, you have to pay a transaction fee to the bank or to the central authority of that system. Bitcoin, you have to pay a percentage fee to the system as a merchant accepting it. So there's fees for that. And then I've heard stories of transactions taking 15 minutes to up to 60 minutes for a difficult or different transaction to occur. So that's one of the negative side effects that some people have cited as, hey, besides the complexity and confusion around it, there's fees associated and there's transaction time. I'm just going to stick with traditional payment methods for a lot of retailers or small business owners.
Well, and it seems based on that, I mean, if I'm not using it for some sort of nefarious transaction, what is other than just the cool factor, if that's what you're interested in, what is the advantage to the customer?
So to the customer side, obviously, if you invested early in the Bitcoin, you've bought in low and you could sell high. So your investment has potentially gone quite high, and you're now able to buy goods and services, relatively cheaply based upon your return on your income that you've earned. But I would say there is definitely a cool factor to it, and maybe the younger generation is a little more tuned in than maybe older generations. I think it's a generational thing. And there's quite this movement against the establishment, against the central banks, and central banks controlling currency and controlling the rise and fall and the price and the money supply, saying there's a better way to do this. And I think that's a real heartbeat of the movement, to say we want something different. And if you talk to real established people in this industry, in the cryptocurrency, that's really one of their number one things is we want to create something different. We want to use something different than what generations have been using and what central banks have set up and what governments have set up and what they can take from us and what they can't take from us. So there's a real passion around it, not just, hey, it's a new way to exchange goods and services for fees.
Well, arguably one of the advantages of traditional currency is you know where it came from and you know who's making the rules. That was not the case. Talk a little bit about Satoshi Nakamoto, the person who may or may not exist,
Sure.
and was the founder of this process.
Definitely. There's been lots of ink written and stories shared and theories out there of who this person is or multiple people are that have this identity. There's been somebody unmasked as the founder, but denied. So I personally believe, I think it's a consortium of people that have come together to create this concept of Bitcoin and blockchain, very revolutionary. But I don't know if we'll ever know for sure. But what it has sparked is this cryptocurrency movement. And as far as price stability and supply, I think we're at a point where it's hard to justify, and as a traditional investor and people, now that this is really mainstream, understand how we get to the pricing level that we are. Where is it going to go from here? The supply is capped for Bitcoin at 21 million coins right now. I checked We're at about 16 million coins mined so far. So there's not that many left to be produced from the mining operation. So unless there is some kind of consensus to expand the money supply of Bitcoin, that is capped at that 21 million. So we have that fundamental to point to, but there really aren't a lot of traditional fundamentals for somebody who's a traditional investor to say, okay, what else can I pin this value to other than just some random theories?
Well, and the numbers are decidedly gaudy. If you look in February of 2011, Bitcoin, for example, was at parity with the U.S. dollar. As of this taping today, today's price was $13,700 per Bitcoin. Yeah. Meaning, if you had invested $75 in 2011 and held on to your Bitcoin, it would be worth over $1 million these days. So that's not a bad return.
Not a bad return. Yeah, it's mind-blowing when you think of the market cap. Bitcoin right now, a $248 billion market cap. Staggering when you think of how long it's taken some of the blue chip stocks to get to that level. Or if you combine Amazon and IBM together, you're still, you're under the market cap of Bitcoin. And that, for something that was unknown just a couple of years ago to now, that's what's kind of staggering and mind-blowing for a lot of people, that how do I know that this is going to be around in 2 to 3 years? You hear some of these horror stories of accounts being hacked or stolen with the funds being transferred. You've heard of other cryptocurrencies that hit the market and then completely lose value within a short period of time. So I think that's where a lot of apprehension comes in to say, is this viable? Is this something that's going to be lasting? We don't know. As traditional thinking consumers and behaviors in the marketplace, just don't know, is this a good investment? It's hard to say. A lot of people, as I say, they have passion around it, and they say, this has got legs and it's going to stay around.
Well, and like many things, timing is everything, I suppose. Right. If you get out at the right time, it's not a bad deal. So talk a little bit more about this underlying technology, about blockchain. I mean, which is the chicken and which is the egg? I assume blockchain preceded Bitcoin?
Yeah. So blockchain is the underpinning system within Bitcoin and some of the other cryptocurrencies. So distributed ledger, basically think of it a big spreadsheet that is distributed among multiple computers, peer-to-peer network where the nodes all participate in this thing called the blockchain. They're running a certain set of software. The software has instruction sets, and by participating, you're running programs, you can extract coins, so bitcoins, in a mining process. But these distributed computers are also processing the transactions, storing things to the ledger, unlocking additional blocks for information to be stored. And I think as far as, chicken and the egg, I think the challenge is that the coin has really gotten a lot of the press, but the blockchain is where I think a lot of the future lies, because there's going to be a lot of coins. If you Google ICO, initial coin offerings, there's thousands of results right now. And if you go to any of the portfolio exchanges tracking the currencies, cryptocurrencies, there's hundreds, there's new ones every day. So it kind of feels like the Wild West. It is the Wild West in a lot of respects. But the real, I think, for an enterprise that's considering, what do I do with this technology? I think the real value is in this concept of blockchain, and how can we apply it to situations within our organizations to increase security and use the latest technology in faster performance, faster transaction time, and more secure transactions.
So one of the terms you hear a lot around blockchain is trustless, and it's actually counterintuitive. If it's trustless, it just means you don't need someone that you trust in the middle, right? So, right. So there are 4 aspects that are often quoted about this technology that really make it work the way that it does. And I wonder if you could just comment briefly on each. First being transparency. So why is it more transparent than other kinds of?
So I would, in my opinion, I would say it's transparent from the standpoint of both parties have agreed this is the medium in which we are going to transact, and the transaction will be recorded to this thing called the blockchain. And so there's transparency in the fact that we know we're both using the same system to verify and validate, and we know that we've agreed this is the medium to transact.
And traceability then is along the same lines, right? And both parties can look at that.
Right. And you know, to back up just one step, there's multiple flavors of blockchain. We've been talking mostly about the Bitcoin blockchain, but there's many flavors of blockchain, and it depends on how the blockchain has been set up. So in Bitcoin, Bitcoin's blockchain, there's a lot of anonymous features within that. So I can't tell who you are, and you can't tell who I am, but that's for the Bitcoin exchange system. Other blockchains, the identities and parties may be well established and vetted out, and so that is transparent and that is available to people to understand, hey, who am I really dealing with, and what information have they stored, and are we storing together?
Well, and one of the other aspects is immutability. So once it's in there, right?
Yeah.
It can't be promiscuously edited.
Definitely, and that's definitely one of the highest cited features of the blockchain technology, is that a transaction is written and recorded, and once validated by all the nodes in the system, that transaction stays there. It cannot be changed, it cannot be modified. Somebody can't hack in there and change values within that block. And the thing that happens is if you need to make a change to that, you know, if it's a document or a contract, that can be changed, but it's written to a new block. And so think of it as document versioning. So version 1 is our draft, and we've agreed that's a draft. Version 2 might be the final that we sign. Version 3 might be an amendment to the agreement. So you still have the original blocks written, and you still have those documents to go back to, but you can't go back to version 1 and change it and call it version 1 again. It's now version 2 or version 3. So it's a very strong feature.
So you touched on something that I'm sure occupies your time fairly prominently these days, and that's the idea of using blockchain for contracts. So there's a term of smart contracts associated with this. What is a smart contract?
Sure.
We assume your firm only writes smart contracts, but
Definitely. We write a lot of smart contracts. But it's interesting that the term smart contract has been thrown around for about 10 years, and it's credited to a couple different people. But if we step back into the theory of what a smart contract is without this technology, you know, we've been using technology for over 10 years where it's almost like choose your own adventure. So think of an estate plan or a will. There's a certain set of questions and variables that apply to this will, depend on what state you live in. Are you married? Do you have dependents? What is your wealth? What does your net worth look like? Do you have houses? Do you have stocks and things? So you plug all those variables into a questionnaire, and they get plugged into the contract. So if you're married, this lights up, and then this section of the contract dims. So if you have dependents, you know, there's more questions, and what are the beneficiaries? So we've been using that technology for over 10 years, and I consider that to be smart contract technology. But applying it to blockchain, now we're talking about we have something, a better way to describe it is self-executing contracts. And so in that vein, now you take the idea of this will, and upon someone's death, you know, it's a little morbid to think about it, but a will is written to distribute wealth or assets upon a certain event happening, somebody dying. And in a smart blockchain type contract, that contract would self-execute to say, okay, X person died, and here is how the wealth should be distributed. Instead of going to a trustee, an individual, a human, the contract picks up the pieces and says, okay, here's the bank accounts, here's the stock accounts, here's the property, and let's now liquidate all that and now deposit it into person A, beneficiary B, and divide up all those assets.
So you could, in theory, just notice one day when you get your bank statement, there's a lot more money in it, only to find out that Uncle Harry passed away.
Correct, but you also have to be concerned about that too, because you've now removed the human element, that trust authority, the trustee, Now the system is a trustee. So if the system is hacked, we talk about the security of blockchain. The transactions are secure, the blocks are secure. But if somebody were to come in and say, Bill has died, Bill hasn't died, but the system thinks Bill has died, Bill's assets are now automatically transferred. That's a concern to me and anybody who would rely on this technology. We have to understand who is that trust authority to decide that the event has happened. And so that's where I think we've put the cart a little bit before the horse when we're talking about smart contracts. That's an estate plan will kind of example, but there's many other examples of contracts that have variables that will execute upon some event happening. It could be time. So if you have a lease with somebody and that time has expired, the lease expires, and X happens, eviction notice, or you've agreed to move out. So there's some danger in that, because I do feel like humans are not binary. We don't always operate with black and white, yes and no answers, where when you program a system like blockchain and smart contracts, you have to define every variable, a yes-no answer, or else the system doesn't know what to do. It needs an answer for every variable. When you write a contract, it's nearly impossible to cover every single variable. There's a lot of gray area. We wouldn't have courts, we wouldn't have attorneys, we wouldn't have judges understanding and arguing two sides of an issue because the contract said X, but it was interpreted by this. We have a law that says this. We need somebody to decide what's going to happen with that. So as we explore this technology and applications in our law firm and how we can provide value to our clients, we're looking at these questions to say, if it's black and white and it's yes and no, okay, we have possible potential use for this technology. But with so many variables about contracts and things, I think we're still a few years out before we see this very mainstream, or everyone relying on a system like blockchain and smart contracts that self-execute, or are they defensible completely? And if the system did X and Y, was it programmed improperly? Was it interpreted wrong? There's just so many things that could potentially go wrong that I think we still need to investigate and dig deeper before we rely on it fully.
But certainly the buzz is out there. There's an example of a company that previously was known for iced tea that changed its name from the Long Island Iced Tea Company to the Long Blockchain Corporation, and their stock had some ridiculous appreciation overnight. Similarly, the time-honored Kodak company of camera fame has decided they were going to develop their own cryptocurrency, Kodak Coin, just recently, and the stock popped 90% overnight. So talk a little bit about what's pushing that. I mean, why is blockchain the magic word these days?
So I think people have investors, the individuals, the corporations, the trust accounts, institutional investors. Everybody wants a piece of the action. And so without doing their homework, they may see, oh, I want to get in early, and early, buy low, sell high, and let's jump on these things that come up. That's why, we've gone from an IPO, initial public offering stock market, to an ICO, initial coin offering, seeing a lot of these companies raising funds because they're on the trend. They're saying, hey, there's money out there that is looking for a home to invest. And if you're in this blockchain, Bitcoin, cryptocurrency, if you have any of these tag words, keywords, people are going to jump on it. If that doesn't sound like a bubble, I don't know what is. I lived through the dot-com boom, and I, saw these companies rise and fall, and bought into some stocks, but didn't get burned as many people did. That, again, it comes back to the fundamentals. And Warren Buffett just yesterday came out with a statement saying his company and himself personally, anything that his advisors are doing, they're not touching anything related to cryptocurrency, because he's a very fundamental investor. And if he can't, right or wrong, I don't know if he's right or wrong, but if he can't touch it, if he can't really dig into what this is, then you've got to have some concern about the longevity and the long-term play of this investment. Is it really going to be there what would cause it to fail. There's so many different factors. So people cite that it's a bubble all the time, and I can't say that they're wrong. We just need to understand and have some fundamentals to point to justify these price levels, to justify investment. I think that's really where we need to focus some effort on. And these prices, I think they're going to have a lot of price instability. But what do we bank those on? And that's where everybody's kind of their heads are at, I think.
Well, we've got just about a minute left. Let's go back to where we started. This notion from the World Economic Forum that by 2025, 10% of the global GDP could have something to do with blockchain. Is it that robust a technology? Do you think we're headed in that direction?
I really do. I believe strongly in the technology of blockchain. And what isn't really described or written well is that there's not just one blockchain. There are presently maybe a dozen, maybe 24 viable blockchains that are out there, but in a short period of time, there's going to be hundreds, there'll be tens, there'll be even millions of blockchains, public blockchains, private blockchains, hybrid blockchains, that every single company, instead of having a database for information, they'll have a blockchain, and they may expose part of it publicly, they may have it internally. The universities will have blockchains. So,
all right, well, we're going to have to leave it at that. Bill Caraher, thank you very much. I'm a little less ignorant than I was at the beginning of the show. To our viewers, we'll see you next time on International Focus.
This program is made possible in part by the University of Wisconsin-Milwaukee, one of America's top research universities, preparing students for today's interdependent world with internationally focused academic and outreach programs.